If I were to list off the 5 most common questions that I get as a tax professional, or that any tax professional gets from small business owners and independent contractors, the number 1 top question in that top 5 would be, what can I write off? People truly don't understand how to work this out. What they probably don't realize is that there's actually very specific guidelines for it. People tend to think about what they can and cannot write off as more along the lines of being in a category than having a more specific definition than that. Now, the thing we're going to talk about in this video is something called Publication 535. Publication 535 is an official IRS publication. This is the main reference point when it comes to determining whether or not an expense is deductible or not. There's actually a very specific definition in here that I'm going to read to you here in a minute of what constitutes an allowable deduction. Now, while watching this video and reading this publication are no substitute for having specific tax advice to your situation, this is going to give you a much better guideline than just the guesswork that I tend to see people using. So I want to get into this with you. Now, this publication that I have, this is actually well over 50 pages long, so I'm not going to read the entire thing to you. What I have instead here are some highlights that are the most relevant to the people who primarily watch my videos, which is going to be real estate agents, real estate brokers, real estate investors, and independent contractors, as well as small business owners. Now, if you actually open up this publication, which anyone can download this from the IRS website, you can download a PDF and get the whole thing in writing. One of the first things you're going to notice is that right when you flip to the first couple of pages here, under the introduction, there are some useful publications as well that we may cover in different videos. But if any of these specifically pertain to you, or you're just an analytic type of person and you're curious, these are some great things to go through as well on your own time. Now, right after that, you'll notice that there's a paragraph that says, what can I deduct? This is the main thing I want to talk to you about in this video, because this is going to eliminate a lot of the confusion you have around your deductions. It's just simply understanding what constitutes a deduction that's allowable. So under what can I deduct, we have a couple of paragraphs that actually define this for us. To be deductible, a business expense must be both ordinary and necessary. So what we have here are 2 tests that an expense must pass in order to be considered an allowable expense. We also have the guidelines for how to figure out if an expense meets these 2 qualifications. So an ordinary expense is one that is common and accepted in your industry. So right off the bat here, we actually have some industry specifics playing a role here, and right away we'll start to notice how understanding an industry can be very important to tax planning for it. Right off the bat, our expenses are being partially defined by whether or not they're common and acceptable in our industry. Now, obviously, you can get into some gray areas there. We're not going to talk about gray areas here. We want to stick to what's in this publication and try and follow it to the letter as best we can. So let's move on. A necessary expense is one that is helpful and appropriate for your trade or business. Again, talking about the specific trade. This last line, though, is extremely important. An expense does not have to be indispensable to be considered necessary. So, don't let the word necessary confuse you here. Just because you can live without a particular expense doesn't mean that you can't deduct it. There's plenty of expenses I think we all have in our business that we could theoretically conduct business without. I could avoid a lot of my business development costs. I don't have to spend time going to seminars, paying for my own consultants, learning more about my market, learning more about tax, investing into my continuing education. There's a lot of that stuff that's theoretically optional for me in my business. Even though an expense may be ordinary and necessary, you may not be allowed to deduct the expense in the year you paid or incurred it. In some cases, you may not be allowed to deduct the expense at all. Therefore, it is important to distinguish usual business expenses from expenses that include the following: the expenses used to figure cost of goods sold, capital expenses, and personal expenses. So even though an expense may pass these 2 tests, there are instances in which an expense may not be a deductible. Now, most of you watching this are not going to have something called COGS, or cost of goods sold. But those can have an impact on what's an allowable expense or not if you do have those, so it's important to understand them. Now, for people who are more likely to be watching this, we really want to watch out for capital expenses as well as personal expenses. Now, in a little bit here, I'm going to go through a section that talks about how we can handle some personal expenses. You know, real estate in particular, you're going to have a lot of things that kind of ride the edge between being personal and business, and we're going to talk about how we can properly account for these in a way that's acceptable. Before we move on to a different section here, I want to touch on the capital expense portion. If you go down a little bit here, you'll notice there is a paragraph for what constitutes capital expenses. Now, these can include business startup costs, which has more specific tips below that in this publication, business assets, and improvements. Now, improvements, if you own a property, let's say you put $5,000 into putting new floors in, that's an improvement to an existing asset. And now, maybe in a different video, we'll talk about that in more detail. Let me know in the comments or via email if you want us to do a video just talking about capital expenses. Now, just for an example of business assets, they actually do give us one here right below under business assets. For example, land, buildings, machinery, furniture, trucks, patents, and franchise rights may all be considered different types of business assets, and you must fully capitalize the cost of these assets, including freight and installation charges. Again, this is starting to get outside of what most of y'all are going to be dealing with. Most of y'all probably deal with vehicles and properties like homes and commercial buildings. But nevertheless, you have these guidelines here, and what better place to get the guidelines than directly from the agency responsible for enforcing our tax code. Now, here's where we start to get into riding the line between personal and business expenses. And again, they give us some really great guidelines here to follow when determining this, as well as, some clarification on, deducting percentages. Personal versus business expenses. Generally, you cannot deduct personal, living, or family expenses. However, if you have an expense for something that is used partly for business and partly for personal purposes, divide the total cost between the business and personal parts. You can deduct the business part. For example, if you borrow money and use 70% of it for business and the other 30% for a family vacation, you can generally deduct 70% of the interest as a business expense. The remaining 30% is personal interest and is generally not deductible. See Chapter 4 for information on deducting interest and the allocation rules. Additionally, there's details here for the business use of your home. If you use part of your home for business, you may be able to deduct expenses for the business use of your home. These expenses may include mortgage interest, insurance, utilities, repairs, and depreciation. Now, there are some additional details and qualifications here for whether or not those expenses qualify, and you can read those on your own time. There's a lot of concerns that people have about, whether or not they're going to get audited if they say deduct a home office expense. All the government really wants from you is for you to follow the rules they lay out, and they create publications like this and they update them every year so that you have that information available to you. Just like people competing in the stock market, they have all the same information available on the stocks. You have all the same information available to you on the taxes. Now, deciphering it can be difficult, which is where people like me come into play. We help you understand what these things mean and apply them to your case. But all this information is available to you, and if you want to feel more secure in what you're doing, the simplest thing you can do is just take the time to read this stuff and to understand it a little bit better. Now, here's another big question that comes up. How much can I deduct? Generally, you can deduct the full amount of a business expense if it meets the criteria of ordinary and necessary, and it is not a capital expense. We've already talked about what constitutes a capital expense. So if you spend $1,000 on Facebook advertising, that's not necessarily a capital asset, it's a direct expense. Now likewise, that $1,000 was spent for the explicit purpose of generating more revenue for the business. You invested that money into the business. It is ordinary for a real estate agent to utilize advertising to generate leads. It's also common for them to use advertising for other things, such as brand building. Many of you are trying to establish your own brand, and you might use advertising to that end. Now, it's also necessary because if you don't generate leads and you don't generate sales, you have no money, you have no business, you have no brand. So it is both ordinary and necessary for someone such as yourself, if you're a real estate agent watching this, to utilize advertising throughout the course of your business operation. So of course you can make that deduction. It meets both the criteria and it's not a capital expense, as we talked about before. Now, another thing I want to touch on here while we're going through this publication is insurances. See, insurance is one of these areas where the deductibility of an expense can get a little bit hairy, so we have some pretty good guidelines here for what you can deduct and what you can't deduct. Deductible premiums. You can generally deduct premiums you pay for the following kinds of insurance related to your trade or business. 1. Insurance that covers fire, storm, theft, accident, or similar losses. 2, credit insurance that covers losses from business bad debts. There's an extended list of other things here, but you want to make sure if you're writing off insurance that it falls into one of these categories. And remember, you can always come back and look at this publication again if you're not sure. Now, in addition to having a list of deductible premiums, there's actually a specific list of non-deductible premiums. You can't deduct premiums on the following kinds of insurance. Now, there's a long list here, but the one I want to bring your attention to is certain life insurance and annuities. It's not uncommon practice at all for people to try and write off all of their insurance costs under the business somehow, some way. I don't recommend just blindly doing that. You want to be aware of the different types of insurance you carry and whether or not those insurance premiums meet the criteria to be written off as we see listed out in this publication. So if you go to irs.gov, you can actually download a copy of this as well as many of their other publications directly from their website in PDF format. And if you want to read it through yourself, you can. If in the past you've struggled figuring out what you are and are not allowed to write off, I highly recommend going through and reading this publication. Now, you may notice there's some things in there that apply to industries that aren't necessarily your own. But if you skip past those parts, you'll find a lot of things in there that are helpful to you. So if you want to know more, I encourage you to go and read this publication and read any other publications you think may be relevant to you. You know, the reality is most mistakes that are made both by tax preparers and by taxpayers are not a malicious thing where someone's saying they're going, oh, we're going to rip everyone off. Oh, no one's actually doing that. It's just as simple as not being educated and understanding what they're allowed to do and what they're not. So by becoming just a slightly more educated taxpayer, you give yourself a significant edge. One of the biggest problems with our tax system is not the tax system itself. It's overcomplicated, don't get me wrong. But it's just the fact that people aren't really introduced to what they need to know or even how to find what they need to know. They're swimming around in the sea of so-called professionals who go off saying different things and they all contradict each other and it just gets confusing. When you go directly to the source like this, it allows you to get some very clear answers on some of your biggest questions, and it allows you to also know, if you hear a professional say, oh, you can deduct this, or oh, you can't deduct that, or oh, you shouldn't do this, If you hear that and you recognize that it's wrong, the reality is that just because somebody has CPA after their name or financial advisor after their name, it doesn't necessarily mean that they're a tax expert or that you should be taking tax advice for them. So if you're not sure what you should be doing, the best thing to do is just go directly to the source. The IRS is the one who wants you to pay the taxes, and they put out these publications so that you can have clear answers on what you are and are not allowed to do. So take advantage of this information and use it to give yourself an edge over your market and use it to help yourself go to sleep better at night if this is something that keeps you up. I hope you enjoyed this video as much as I enjoyed making it, and I hope this information is helpful to you going forward as you go to file your tax return in the coming weeks. See you soon.